Good morning. Good morning. Hope my audio is reaching far and wide to everybody in North America and Australia and Mozambique, in the savannas of Africa. Everywhere it's reaching. Oh, we're getting some spikes over here. So this is a Friday here, and since it's a Friday, we're probably going to be laying low here. I'm not going to be forcing in any trades. I'm not going to be looking for any opportunities to take a trade because it's the end of the week and we got to focus on how our performance was this week and kind of see how we can get better as we move on into the next week. So I think that's going to be very, very important as we come in on Friday here. So let's take a look over here. What's this? This is, hey, please take a look. All right, let's take a look over here. What's going on here? This is GPJPY 30-minute chart. We have resistance here for sure. We have a support down over here for sure. Okay, let's just do some analysis here on GPJPY. Of course, we're gonna have a guest here later on. His name is Jeevan. He's a good friend of mine. He's very, very well versed in the fundamentals of the US and what's going on. So it's going to be a very interesting conversation we're going to have today. Let's see here. Okay, so we're going to remove everything from GPJPY and we're going to go down to the daily time frame. Now, looking at the daily, what we can see here is in a minute. Man, this new 4K monitor is sick. Okay. So daily is rejecting a support down here. Obviously, we had the support form back on the first week of October. We kind of rejected the support here as well, and now we're rejecting it again. Let's take a look on the 4-hour time frame. 4-hour is also coming up here. Looks like this moved down. Oh, let me just make it a little bit bigger. Looks like this moved down below 135.900. Seems like a fake out over here for price to continue moving bullish. And if it does continue moving bullish, I think we should end at 136.600 today. Right, if we do continue moving bullish here in the rest of the New York session. Looking on the 1-hour time frame, 1 hour is creating that, it created a high, came down, now it's trying to move up. But the only problem with the 1 hour is this resistance right over here. And this resistance is pretty solid looking at it on the 30-minute time frame here as well. If you look on the 30-minute, you can see right here, right? This is a very, very solid resistance at this point. So we'll need price to break above this resistance around this area right over here. We'll need price to break above this area for price to continue moving bullish. And now if we measure this range, this is a pretty big range from 136, let's say 300, all the way up to 136, 600. This is a 30 pip range. So I think it's a pretty good area to look for some sort of trading ideas above 136, 300 if it presents itself. Looking at it from a selling perspective now, because obviously you have to look at charts from a buying perspective and you have to look at the charts from a selling perspective, right? You have to look at it from both perspectives. So looking at it from a selling perspective, looks like we created a support area in this area. So this is a pretty broad area, right? Because we had these rejections coming all the way down into 135.900 around like in a 10 pip range. So probably gonna wait to see if we do break below this area around here for price to continue down towards the support it came up from 135.700. The stream's current bit rate is this is lower than recommended. Oh, pretty good connection running here. Okay, so let's take a look at this trade idea here. Buying above 136.300, selling below. Exactly. I have the same situation over here. This is a lot more complicated situation here. Sending by Alex here. What's this? Choppy Asian structure, price breakout, choppy area, resistance, price printing side by side, consolidation, support formed during the London session, no trade range, a lot of rejection in this area before clean traffic. So you're waiting for price to break up into this zone. So basically the same idea, waiting for price to break above, 136.300. So I think that's a pretty good idea. So we'll have to wait and see. Let's take a look at gold here for a little bit. Let's remove all analysis from gold and let's go towards the daily time frame. Let's take a look at gold. Gold is obviously trying to move up. It also came up to fill this wick at this point. Looking at the weekly, weekly is rejecting 1884 area and coming up over here. Now, the problem is if this weekly candle closes bearish, there's a very high probability for the next weekly candle to continue moving down. Yep, that's something that can happen, right? And looking on the 4-hour, let's take a look on the 4-hour. 4-hour seems like it's coming up as well. You know, but this is a very, very strong rejection area, 1912, 1910, because, you know, on the 14th October, 4-hour came up around NY session and rejected it. And now 4-hour is coming back up to this area over here. So looking on a 1-hour time frame, we are kind of in a rejection area here. But if we break above 1912, 1910, there's a very high probability we're going to continue up towards, you know, 1920, 1922. All in the zone right over here. It's better when you're viewing from YouTube. Yes, YouTube has a 10-second delay, basically. Hey, how did you manage to have 1 or 2 trades? 1 or 2 trades a day, that thing is so hard to do. Yeah, man, I mean, 1 or 2 trades, it's actually not that hard. You just got to take 1 to 2 trades and call it a day. That's it. That's it. I think that's where people get stuck, you know? Focus on 1 or 2 trades and that is it. That's it. 1 or 2 trades. There's nothing more. There's nothing less. I mean, the more you trade, as you move into the second trade and the third trade and the fourth trade, then obviously, you start losing money, and then, your emotions come into play. And obviously, when you have live money playing in, and then, yeah, the emotions, I mean, I don't know, it gets pretty hard at that point. Can you afford a Lamborghini? It costs around 4,000 a month to do that. So I don't know. I don't want to spend 4,000. I can better spend that money on something else. Like save it. All right, let's take a look at this chart here. Ooh, nice. Enter buy 5 minutes before the London Open. Beautiful. 11 pip profits. If you had a runner, that thing could have gone even more. Let's take a look at this here. This is candle closed. Oh, all right. Candle closed below support. Entered sells on, yeah, see right over here, this was the problem right over here. This was the issue because you sold at the bottom. And whenever price is trending down, never sell at the bottom, sell at the top, wait for price to create resistance. So this was the resistance being created right over here. I think after this 30-minute candle, you should have taken a sell.
There was no range on the previous chart.
Yes. Hey, I just joined. I'm thinking of taking sells if this 15-minute candle rejects resistance and the next 5-minute breaks the lows. Could this idea be valid? This idea will not be valid because you're looking to take entries based on a 5-minute, which is highly unpredictable time frame. That's not valid at all. Plus also, if you're looking at this range over here based on 15-minute confirmations, I don't know, that's going to be a pretty good thing to do. But seems like we are trying to break up over here. Oh, there we go. We're broken up. See now, since it's breaking up an area which was rejected once, twice, thrice, 3 times, so we want a candle to close above 136,300. Well, I'm sorry, not we, you. You guys want to wait for a candle to close above 136,300 and then take a potential trade for price to continue on towards 136,600. That's going to be a better idea, right? Waiting for candle to close. Because the thing is, it's a Friday. You don't want to add unnecessary risk as well. So you want to wait for confirmations, right? And the reason why I'm saying wait for candle to close, because we had rejections here before, right? When this wick was formed, candle was extremely bullish and it went down. And then the same thing happened right over here, same thing happened over here, same thing happened right over here, right? So we don't know as this candle is going up whether it's going to make a wick to continue down or it's going to continue moving up. Now, since you're waiting for a candle to close above this area, two things can happen, right? You can either miss this move and price can continue moving up to target, or price can come down and then give you an opportunity to enter. If you miss this move, then it is what it is. You just can't do anything about it. You just have to quietly accept the fact that you have missed the move. That's what I do normally, when I miss the moves, I just tell myself, okay, Raja Banks, you missed the move. Alright, let's take a look at this chart here. Oh, nice. Ambidex is in buys over here now, based on 30-minute. We'll take entry here if price passes the previous 30-minute high. Beautiful. Little impulse trade on Friday, but pretty sure it can work out once we get a candle closing above, this area 136.300. Oh, looking at the 15-minute, we got some sort of a rejection over there as well. All right, Euro USD could be sell if candle closes bearish. It's at rejection. I think you need to send the chart. You need to send the chart. You need to send a chart about that idea, that how it can continue moving. Let me see if I can get some face lighting over here. Oh, too bright. Here we go. Here we go. Oh man, this thing is continuing running over here. See now, when you're watching price move, you should not have any FOMO, nothing, right? Because it's moving, and if you're waiting for something to happen, I'm waiting for price to maybe come down, create like a support, give me something like a retest, so that we can continue on. So we can continue on with the price action continuing to 136.300. Do you have any losses this week? Yes. I've had 3 losses this week. So basically, let me see over here. Yeah, I had a bunch of losses this week. This week was pretty easy. Yeah, I have had 2 losses this week. 2 losses and 4 wins. Roger, that guy working out was doing the extreme drawdowns. Yes. I'm coming up on a year of trading Forex, and this month was my first month I broke even. Oh, beautiful. Beautiful. It was only because of taking 1 to 2 trades a day and being patient. Yeah, that's it, man. At the end of the day, you just gotta take 1 to 2 trades because here's the thing, right? Here's the thing. When it comes to discipline in an area where you have the ability to make large amounts of money, right? It gets pretty hard, but when it comes to discipline and going to your work on time and finishing your projects on time and leaving for lunch on time, coming back from a 15-minute break on time, we're really disciplined at that, and knowing we're only making a certain amount of money. But when it comes towards trading or business, man, most people aren't disciplined at all. So you got to be very, very disciplined here. Isn't the latest resistance zone at 136.200? 136.200, candle closed above it. It was good for buys. I think it's right over here. Someone to wait for a price. Ooh, hello there.
Hey Ricky, how's it going?
Hey, good. Jeevan, how are you?
I'm good, man. What are you guys up to?
Oh, nothing, man. It's a Friday, just laying low here, basically.
Are you looking for some GJ buys?
GJ buys, yeah.
Yeah,
Yeah.
that's what I was looking at as well. There's some positive Brexit headlines as well, like that caused the impulsive move up. So
Earlier on in London session, was it?
huh?
Earlier on in London
Yeah,
session?
yeah.
Yeah.
The near deal.
Ooh.
Yeah, that's it. The close to a deal 3 hours ago. They've been saying this for a long time,
Man.
but any optimistic talks, I know what you mean, right? Like they have these back and forth headlines like
Yeah.
24/7, but we just have to take it as whatever the investors take it as either optimism or market fear. And most likely, if there's any talks about Brexit progression, even though it doesn't lead to anything, the GBP buyers jump in from the dips, right? So
You know, since 2016, they've been trying to reach a deal. And it's just been
Yeah.
back and forth, back and forth. They sacked the Prime Minister, Theresa May, and man,
oh
it's
yeah, I
been a
forgot
mess.
about that.
Yeah. We also got retail sales for the US here later
Yeah.
on. I'm expecting these to be good.
Yeah, 100%. If that retail sales is good, it should bring down the US dollar a bit and bring more market optimism through New York session. And then I was looking to take advantage of that potential US dollar weakness.
Really? I think that with the good retail sales, shouldn't the dollar move bullish?
No, one of the things that I try to focus on when we're talking about like the fundamentals is you have to understand the US dollar behaves like a safe haven currency, right? The three main safe haven currencies are the Japanese yen, the Swiss franc, but one of the main ones a lot of people forget is the US dollar. Right? So whenever you have any optimistic data, it has a positive impact on the U.S. equities, the U.S. stock market. It gets taken very well. Like if you have good jobs data, or if you have good retail sales, etc., like that. But this takes away liquidity out of the safe haven currencies because investors' behavior and sentiment becomes more into goes into the risk currencies. So those are the three main safe haven currencies, and the other currencies, the primaries in the quote, are seen as risk currencies like your euro, your GBP, your AUD, etc. Right? So like there's different ways we can verify this if you want to talk about that on like a macro or intraday perspective of how we can see smart money sentiment move throughout the currencies, and this can be very confusing for people who actually don't know how like these currencies actually operate, right? So one main thing I want to explain just so people can understand this a bit better is the US dollar standalone, the US economy, and the US stock market are three separate entities. Okay.
Oh. Did you see GJ?
Yeah, it rejected at 136.2.
Dying, man.
Rejected,
Headline just came out.
bro.
That was a fine liquidity grab.
It didn't reject. It got annihilated over. God damn.
That was another headline that just came out.
Yeah.
Wow, whoever had no stop loss. Jeez.
It doesn't matter if you have stop loss. Stop loss. It slipped 40 pips at least.
Man. So this is another reason we were waiting for kind of to close above.
Yeah. I was gonna talk about, but it just rejected hard. Like it's right above 136 again. Because Boris Johnson's giving out live Brexit headlines right now. I'll tell you guys the exact headlines. Boris Johnson has given the EU. He says the EU has refused to negotiate seriously. Johnson says we should get ready for a no deal style exit in January, and he says they're still willing to discuss, but there's too many issues between the UK and the EU right now that they need a Canadian or Australian style deal. Because I got the news terminal up, so like the headlines come up like within the minute.
What news terminal do you use?
The Reuters icon.
Okay.
Yeah, it's like the Bloomberg terminal, but it's cheaper for the yearly. It's cheaper for the yearly subscription.
Man, that is crazy.
Yeah, but anyways, yeah, that was crazy. That one headline comes out within a second, and you get 100 pip drop. This is gonna drop more after saying that. This is gonna drop a lot more after saying that. I would look for a retest of 136 and then more south.
Wow, this is nuts.
Okay, so
Yeah, so you were saying.
yeah, so we're talking. So for some people, I know moves like this are intense. They get people going, but when we talk about the U.S. dollar, the U.S. stock market, and the U.S. economy are three different entities, right? And this is gonna impact this headline that just came out. This negative headline is also gonna impact market fear and the U.S. dollar right now. If you look at the dollar index, for people who are saying that the U.S. dollar is not a safe haven currency, right? Go to the dollar index chart right now, and go to the hourly. It just spiked up on that headline.
Okay. Yeah, I see it.
Right? So if you could do a simple Google search and understand that the US dollar, the Swiss franc, and the Japanese yen are your safe haven currencies, right? If you search what are the safe haven currencies, you would see these three currencies come up, okay? What confuses a lot of people is the difference between the US stock market, the US economy itself, and the US dollar, okay? These are all three different entities. And an example of this is when we had the coronavirus market fear first hit the scene and we saw the stock market crash. At this time, when the stock market was extremely bearish and crashing, the US dollar was extremely bullish. It was not until the Federal Reserve started printing out mass amounts of the US dollar and injecting the US equities market that we saw the inverse happen. Okay, so when the Federal Reserve started printing out mass amounts of US dollar to support the US economy, for the US stimulus, and for the American people that lost their jobs as well, this then what did we see happen with the US stock market? We saw Dow Jones or US 30, NASDAQ, whatever it may be, do a full recovery. But then if you go to the dollar index and you look at the daily, it went down. The dollar went down, but the US stock market went up when the markets were very optimistic for multiple reasons. When the Feds are printing out mass amounts of the US dollar, this increases the amount of US dollar supply in the overall market. And supply and demand is something that impacts everything in the market. Doesn't matter if it's a commodity, doesn't matter if it's a currency pair. I'm not talking about supply and demand zones on the technical chart. I'm talking about the actual supply and demand of the physical US dollar in the global economy.
So
right?
let me ask you this. Yeah, I'm sorry to cut you off. Let me ask you this. So all these. So now let's see what's happening right now. Right, the governments like this, especially the U.S. and Canada, they're printing money and giving people as in terms of like stimulus checks. Correct. So what you're saying, so that's the same thing as like the government saying, okay, so we're going to print money to give people this money in hopes of recovering the economy.
Yeah, there was multiple different reasons for printing money. One was to give it to people to help them like get the economy moving again, so they could still pay their bills, they could still go out and consume, right? Because the major things that keep an economy moving are people people having jobs and working, and then on the flip side, you need them out in the economy, putting that money back into the economy via consumption. buying goods, paying for services, and paying taxes on all these goods and services as well, right? So what happened when coronavirus hit the market, and then we had this economic crash that was pre-planned anyways. It doesn't matter if it was coronavirus or a pandemic. It doesn't matter if it was going to be some type of war in the Middle East. It could have been a war with Iran, right? There was going to be some reason, because this is just an economic cycle that happens every 10 to 15 years, where you have this major transfer of wealth, right? Okay. So when you have this major transfer of wealth that you could also back test, that happened in 2008, it happened around 10 to 12 years before that as well. When the stock market crashes, it is not the banks necessarily, or the 1% or smart money that loses out. It is the millions and millions of regular working citizens who are invested into the stock market unknowingly, through their pension plan, their retirement plan, their 401k, whatever it may be, right?
There's a question here. What evidence does the speaker have about major transfer of wealth happening the same thing right now as it happened before?
That's the evidence that I'm speaking about right now. So when you look at the Dow Jones chart, right, and you just go to like the daily on the Dow Jones chart, the US 30 chart, right? I'll show you guys what I mean by the transfer of wealth. And then I have a webinar on it as well for free on my YouTube.
Okay.
So zoom out and go to when we crashed down to 17K. And I'll explain this.
Oh, right here, March.
Yeah, so when we crashed down to this point, you have to understand that over 5 to 8 years of financial gains in the stock market were wiped out. Whose money and liquidity was that? Where was that money and liquidity coming from? Okay. One of the primary sources of liquidity in the stock market, specifically for North America, is from the day-to-day 99% working class people. Okay. It's via their pension plans, their retirement, mutual funds, wherever they are investing through their employer into their pension, retirement, whatever it may be, or through different investment packages with their bank. This goes into the stock market. So when you had the stock market crash and drop down to 18K, and you had millions and millions of people have their 401ks, their retirement, their pension plans get wiped by almost 50 to 60%. Okay.
Yeah.
One thing, keep these things in mind. Okay. The Federal Reserve had full potential to stop the crash whenever they chose. They didn't have to wait till the markets hit 17 or 18K, or you had 5 years worth of financial gains wiped out to then cause the circuit breaker on the US stock market. And then they started flooding the market with US dollars. They waited for 5 to 10 years of financial gains from the American working people and other working class people to be wiped out. And then they jumped in from those low points and started injecting the US economy, where guess what? When the market crashed and you had all those people who are unknowingly involved in the market through their through all those different avenues, like their pension, their retirement, their 401k, right? That liquidity gets taken from them. It gets taken from their accounts, and they don't even know what's happening, right? And then it gets put back into the bottom buy dip by the 1% or the short sellers who were involved in the market at that time, because the market only works off buyers and sellers. You can't have one without the other. So when all those people were losing money, it went to another hand, right? You know, that money goes from one hand to the other every single day in the market. That's all it is. It's money moving from one hand to another. Okay. So now that liquidity gets bought up from the bottom at 17K. And even though we've had millions of jobs still lost, we still had some economies locked down, we still had people losing jobs, we still had coronavirus headlines, right? You still had Dow Jones do a full recovery to the same price that it crashed from within a matter of a month or two. Within a matter of months, it did a full V-shaped recovery from the 18K crash, and now it's sitting back at 29K. Okay? Do you think that those are the average Joe that are back in the stock market? No, it's the 1%. It's the banks. Once those people got swept out, who are back in the stock market with the support of the feds. You can't fight the feds against the stock market because the Federal Reserve, the US politicians, and the US corporations would much rather have the stock market recovered in bullish than the US dollar bullish.
So let me get this straight here, right? So what you're saying is that all these gains from 2016 were wiped out in almost a couple of days.
Yeah,
right?
Days.
And everyone who had their investments in 401ks, RSPs, they all took a big hit. Now,
people had that developing over years. Just it's not them investing; they're just working.
Yeah,
they're just a 99% going to work, where a certain percent gets taken out of their paycheck and it goes into their pension or retirement, or they think a certain percent of their paycheck is going towards these end goals of retirement or pension, when in reality the bank takes this money and reinvests it back into the markets, so they can play with the banks play with our money.
Yeah. So with the rate that this recovery happened, how come that those 401ks didn't recover with the same rate?
They didn't recover at all because they are not meant to recover. That is the transfer of wealth.
Holy, okay.
Yeah, they're not meant to recover. The money
I get it.
Yes, the money got taken. The money got taken from that 99% of those day-to-day working class people who lost their jobs, who lost their 401ks, their pensions, their savings. It gets moved from one hand to the other, where it's going to the 1% of banks, and then the Federal Reserve decided to start pumping the markets after 17K. Wow. And if you want to see where this has happened before, go to 2008 on the Dow Jones chart, or go to the year 2000. Right?
Jeevan, how did they lose their 401k if they haven't mixed their investment? Like, understand what you're saying. Like, if your 401k gets a hit in the market, but only if you touch your investment. Like, if you don't touch your 401k, you leave it the same, it has to recover. Once the market goes back up.
It doesn't have to recover. You're thinking, and I understand that question, but you're thinking from your perspective of somebody who might be more financially involved. The 99% of people, the working class people, do not think or operate the way we do when we're trading the market. Most people, when they're in that situation of coronavirus and they already lost their job and their 401k or pension already took a significant hit, or they were out of work and they're waiting for these benefit checks, they have no choice but to cash out, right? That's when market fear comes out and they exit all that stuff out, because they've already took a 50%, 60% loss on that portfolio, right? They're not thinking the same way you are. They're not thinking the way we are. These are the regular working class people, the 99% people.
Yeah, man, that's crazy. That's
okay from that perspective. Yeah.
Like these are people who lost their jobs. They lost their livelihood. They had businesses shut down, etc., right? So it's through these different investment portfolios, and even when you put money in your savings account, obviously you're never gonna see zero in your savings account unless you cash out. But when I worked in financial tech for a Canadian bank, and this is just a common concept, all banks do is use your money and reinvest it into the markets to make major percent with your money, as they give you back like a 0.2% on your high interest savings account. You know what I mean? Like that, banks would not be able to operate without our money. The country would not be able to operate without people working and without our money.
Yeah,
Right?
that's pretty interesting, like the way you explained it, how this was the transfer felt, because I was under the impression that if we can fall this much, right, and all the RSPs and the investments can get lost, then this recovery over a couple of months should also recover, those investments, but it didn't. So I think to substitute
That's what I mean.
those losses, they said, okay, well, since you lost all your money, here's some money per month. Be happy, it's all good.
That's a good way to view it as well. And that stimulus, those stimulus checks, it's all debt. The central bank, all the money that goes into the stock market that was getting flooded by the central bank, how they printed out more US dollars, is more debt that the US government and the US people are going to go owe back to the privatized central bank that is the Fed, right? The central bank, the Federal Reserve, is not owned or operated by the US government. It is a private banking entity, just like every other central bank. They dictate the flow of US dollar and the flow of money, the interest rates, and this is all debt. Just like you would go to your local bank and get a loan with a set interest rate on it, or with a set period you have to pay back your debt. That is the exact same when the Federal Reserve is giving that to their that is the exact same when the Federal Reserve is giving money out to these countries, right? The Federal Reserve just gives it to the US, but I'm just talking about the respected central banks for each country. The Bank of England for England, the Bank of Canada for Canada, the Federal Reserve for the US. It's all debt being printed out that eventually is supposed to be paid back, because what the government does is they issue these treasury and government bonds, which are like IOUs that they sell to the Federal Reserve, and the Federal Reserve gives cash in turn for those bonds and IOUs that have expirations for 5-year, 10-year, 20-year bonds, whatever it may be, right? So it's all, huh?
But eventually, if they keep printing all the time, is the US dollar not going to be worth anything anymore over
Exactly.
time?
So now, when we just looked at the Dow Jones and you saw that massive V-shaped recovery, right? That V-shaped recovery is not naturally induced. It is not it is not what we call an organic recovery. It is an artificial recovery, because this pump from 18K to 29K is primarily induced by the Federal Reserve's money injections and more printing of the US dollars and flooding the US economy with those US dollars. Okay, so now keep that in mind, that you had this massive sharp crash, and then see that retest of 136. That was a nice retest. Remember I told you I'm looking for the retest of 136 in sales? That was a nice retest.
Yeah.
After that negative headline. But anyways, so if you go to the dollar index chart, right? Yeah, Vince, you take those sales, right? 136 retest, click 20 pips. Trust me. But if you go to the US dollar chart, right? If you go back to the dollar index chart, Rakeel. No. Go to the US dollar, just the
DXY.
Yeah. And go to like the daily. And just zoom out. The US dollar, see when the stock market crashed, that's when the US dollar had that heavy bullish spike from that yellow line Raja has up to 103. Because market fear was picking up globally, so the safe haven currencies inflated. Investors put their money into areas that could keep them safer. They put it into gold, US dollar, Japanese yen, and Swiss franc, okay? Now, after they started printing out more amounts of the US dollar to flood the stock market, to help the stock market, the US dollar went extremely bearish because it's oversupplied. The more supply of US dollars you have in the market and the less demand, the lower the price, right? So that is why when you had the coronavirus crash, the US dollar was actually extremely bullish for that period, for that quick period of time of extended days, right? Like, can I annotate on the screen here?
Yeah, one sec. Okay, yeah, go ahead.
that right there was when the coronavirus markets, like March, right? So the US is this, that's just another proof to you guys that the US is a safe haven currency. When you had mass market fear, you had this huge inflation in the US dollar, and then you started getting the feds printing out mass amounts of the US dollar and putting this into US stimulus to give to the people who lost their jobs, and also to inject in the US stock market.
So the more money they were printing out, it's
The higher supply,
and that was devaluing the dollar, which is why we're seeing this
which
bearish
is
run.
why we see Dixie bearish and why we see
Okay.
the stock market bullish.
Mm-hmm.
So now, understanding that the US dollar operates as a safe haven currency, if you understand that, when we have any optimistic market data being like data that is showing signs of economic recovery, the US dollar actually weakens because its demand is decreasing as a safe haven currency. Investors rather put their money into the US stock market. It's a better payout, it's a better risk versus reward, and you're playing with the trend in the Feds on the US stock market. Right?
Oh, that's why Trump was saying back in the days the dollar is too overvalued.
Exactly. And so the US dollar literally did the inverse of the stock market, because you had that. So when the stock market crashed, the US dollar was extremely bullish. Right? And then as you had the Feds print out more US dollar, higher supply, lower demand, the price of the US dollar decreases because it's so heavily supplied, but that US dollar money is going in to support the stock market. Because what would the government of the US and the Feds rather have? Would they rather have the stock market go to zero or the US dollar be weak? What would they rather have weaker, the US dollar or the stock market?
They'd have the US dollar weaker because they want the stock market to be up.
Exactly, because if this, look at GJ's wilding. If the stock market, stock market went to actually zero and crashed, what would be the real financial impact that would come out of that? You would have every one of those companies in those different sectors go bankrupt. That would lead to an actual US economic depression if the US stock market crashed, because you would have different companies in the energy sector, pharmaceutical sector, food industry, retail, entertainment, technology. They would all be bankrupt as their share prices would go to zero. So the Federal Reserve, the US government, they would much rather have the US dollar bearish and sacrifice that inflation of the US dollar and print more of the US dollar, because they have the power to do that, and put that money into the stock market rather than have the inverse. Because if they allowed the US dollar to remain bullish and they did not give that financial support to the US people or the stock, or they did not stop the short selling of the stocks, or they did not do those financial money injections into the stock market, that would have led to an actual US economic depression, because all those thousands of companies would have went their stock price to zero, right? So they cannot allow that. And the Federal Reserve has the ability to print as much money as they possibly need, literally unlimited. But they do not have the ability to revive thousands and thousands of dead businesses that would lose all their employees, they would lose all their investors, their stock price would go to zero. That would be a real, true economic depression if that happened.
But at the same time, like, if they keep on printing money, wouldn't that make like goods expensive? Because that's going to create like massive amounts of inflation.
Yeah, it is 100%. That is it will create massive hyperinflation, and the price of goods will continue to go up. But that is not something that is new. The price of goods and services and our cost of living has been going up exponentially since we've been in the mother's womb. You know what I mean?
Yeah.
Wages have always been stagnant, but the cost of living has always been continuing to go up. Yeah, DJ's going wild because they're talking about more trade talks, that they still want to have trade talks. But that 136 retest was a good sell scalp down still, trust me.
Yeah,
I got that too.
situation.
Yeah.
What I think is like Biden is going to be the correction in the market.
I agree with that.
Like if he
The markets love Trump.
He's going to provide correction for whatever Trump did to the market.
Yeah. So now you know how we just looked at the U.S. dollar and we just looked at the Dow Jones on a very macro level. We just wanted to make that comparison from like a higher time frame level. This same economic cycle and this process of money being moved from one hand to another, going from safe haven, going from like risk currencies into safe haven currencies, that transfer of wealth happened in 2008 during that financial collapse. It happened 10 to 15 years before that. These are predetermined economic cycles that are unavoidable because of how there is not any real strong economic infrastructure in our world. There is no real value behind money anymore. It's not essentially backed by gold. It's just the value is given by what the central banks say and their money supply, right?
Yeah.
So to see this, so for an example of this, if you go to the Dow Jones, just put the Dow Jones on the full chart up now and go to like the 4 hour or go to the 1 hour, and then just go to the Dow Jones US 30.
Yeah. Oh, US 30, one sec.
Yeah, so this same concept, that was an example of overall macro fear. That was like when coronavirus hit the markets and you had this mass market fear come into the scene, right? Just zoom out heavy. Yeah, a bit more, and then, yeah, okay, perfect. So Dow Jones, you have to remember, one thing is it's easier, and for this concept, it is easier to buy the US stock market than it is to sell it. Because of that concept, even though we had that mass market crash, on average, it is much easier to buy the stock market than it is to sell it. Because of that concept, I was just telling you guys that the Federal Reserve, the US government, and the US corporations would much rather have the stock market bullish. So now, how can we use this information of fear and greed to take intraday trades? If you remember, Rakeel, this dip right here was caused by when Trump got coronavirus. Because people are asking, how can you use this information to day trade? Well, I told Ted that Dow Jones sell call when Trump got coronavirus, he made 100K on that Dow Jones sell.
Yeah,
You know
I
what
remember.
mean? Okay, so listen. We don't want to just understand that. This first dip down where we saw intraday buyers peak new highs, we have this overall bullish market structure developing. This crash, we don't want to call it a crash, but this intraday sell play was when Trump got announced with coronavirus, okay? You can see that even when Trump, the president of the US, no, I'm not talking about the wrong drop, trust me. That's the Trump drop, this is the US stimulus drop. Trust me, I know what the fuck I'm saying. Anyways, okay? Yeah, that's the US stimulus. That's when Trump denied US stimulus. Trust me. This is when Trump got coronavirus announcement. Okay? So when Trump got coronavirus, obviously this brought mass fear and uncertainty to the US economies, where that fear led to a drop in the US equities and overall fear sentiment to increase. When you saw this drop, you did not just see this drop on just the US stock market. You saw it also on your yen. The US dollar increased in strength, the Japanese yen increased in strength, and the Swiss franc increased in strength. Okay? But look at this. Even with that Trump getting coronavirus, did sellers break below previous lows? No. Even when Trump, the US president, got coronavirus, sellers on Dow Jones still did not break below previous intraday lows, and they still respected the bullish market structure and failed to break those lows. And then 2 hours later, Trump said he was healed from coronavirus and he's never felt better. He feels 20 years younger. He was also telling people to not be afraid of coronavirus, etc., right? So So and at that same time on Friday, you had a positive US NFP. So you had Trump go from having coronavirus and bringing that market fear to the scene, but sellers failing to break previous intraday lows technically, and then hours later say he is recovering from coronavirus. He feels 20 years younger, and then the following New York, you have a NFP that shows 1 million jobs were created. Look at that dip get bought up to new intraday highs, and a new intraday high is peaked by buyers as you have price playing in this ascending technical channel, but you can play the fundamental headlines and confirms out of it. So now a new intraday high is peaked by buyers in the stock market, right? Trump announces that he is not going to be going forward with US stimulus until he is not going to be going forward for US stimulus until after elections. This brings more fear and uncertainty into the market because he is denying potential more support for all those people that lost their jobs. You had the stock market take another hit, but did it go to even test previous intraday lows or even break below previous intraday lows? No. Right? Then you have price respecting this bullish structure. 2 hours after that, Trump says he is still looking forward to stimulus talks, and he retracts his statement about no stimulus. The stock market gets bought up again from that dip back to new intraday highs. Right? What I'm trying to tell you is that these different headlines of market fear or market optimism day to day, you can use this information to take day trades or scalps alongside technical market structure and the observation of price action. You know that when this sell happened and Trump got coronavirus, that it didn't break previous lows is something fishy. And then you have a technical support being created. At the same time, Trump is saying hours later, he feels 20 years younger.
Yeah.
And then you have a positive NFP, you go back up and you just play this trend. It's just a trend. Even though Trump said no stimulus, it was still not enough sellers, order flow, or pressure in the market to break bullish market structure or to test previous intraday lows. And then you have him retract his statement and say, never mind, I still want to do stimulus. I want to help the American people. This dip gets canceled out and it's just a buyer's dip, a pullback. And we go back from this higher low to a new higher high. You're just playing this structure. And now, right?
So how does this affect gold?
Okay, so for gold, the inverse correlation between gold and the US dollar has been more prominent. So when the US dollar is weaker, gold has been more bullish, playing that inverse correlation, right? Because it's XAU against the dollar. So if you want to use this for intraday information, you can look at the dollar because you understand that the dollar is a safe haven currency and gold has been heavily overextended into the 2000s. That is just playing more on these intraday ranges. So when you are looking at the dollar, and right now you can see the dollar is showing us potential bears, right? If the dollar even comes up to like 95 and then continues to melt down and break these previous lows, you will also see gold continue up to test these previous highs and respect its lows and respect that structure because of that inverse correlation. So all I'm trying to say is you can use all of these different confirms of headlines, of economic data, of understanding what impacts market sentiment and investor behavior for scalp trades, intraday trades, swing trades. You just have to adjust to the time frame you are on and based on the information you are looking at, right? So like, for example, those negative headlines from Trump when he got coronavirus, it also caused a dip. It also caused a sell-off, for example, on like Euro USD or even GBP JPY at that time when Trump got coronavirus and Ted and I took US 30 sells. It also supported sells that Monty was in on GJ because you have more money going into the Japanese yen as a safe haven. right?
Yeah, no, that's true. At the same time, I'm still kind of trying to figure out why good retail data will drop the dollar.
So stronger retail data will bring more market optimism for the US economy. It will have a more positive impact on the US stock market, and it will devalue the US dollar and decrease the US dollar's demand short term, because the US dollar is dependent on fear or optimism, because it's a safe haven currency.
So what you're trying to say is that, okay, so what I'm understanding here is that, okay, so in the first part we talked about like the more US dollar is printed, its value decreases, which is why we see weakness in the USD, right?
Yeah.
And if, let's say, the retail data is good, so if the retail data is good, that means more people are spending money, which means they're spending which means that money is going into circulation. So when it's readily available, that decreases the value as well.
That doesn't decrease the, so when there was mass printing of the US dollar, that increased the supply, right? Higher supply of something, you can usually means a lower price of it. Higher supply, low demand means low price, right? And then the opposite, if you have very limited supply of a good or product or currency and a high demand. So those people that are spending money, that money is going into the US corporations, the US businesses. It's not going into the US dollar. Right? So that money is going into US corporations in the US economy. It is not increasing the demand of the US dollar. It is not decreasing the supply of the US dollar. It is just US dollars being circulated in the economy. And there's no shift on that, because the Federal Reserve isn't like decreasing the supply of it in the market. So it would be a more positive impact if the retail sales is good for Dow Jones. Just like when NFP was good, just like when the last NFP was good, it had a bearish impact on the US dollar and a bullish impact on the US stock market.
Yeah. Yeah, see, now sometimes that catches me off guard, because sometimes it's like, well, okay, maybe this dip down on dollar is, maybe it's grabbing liquidity to move up later on.
I just look at it like because I just look at it with a basket of currencies as what is your risk currencies and what is your safe haven currencies. And whenever there is market optimism, it decreases the investor inflow into safe haven currencies, and that money goes into the risk currencies and into the stock market. So if there is really strong US economic data, whether it be NFP, whether it be retail sales, this decreases the demand of the US dollar and puts more money and inflow into the US equities.
Man, what really blew my mind today was knowing how this recovery, it didn't really recover all the 401ks that people spent building from 2016.
Yeah, for years. Even before that, they were building that and got like a good chunk of it wiped out, right?
Yeah. It's not even like building, it's like adding onto it and just waiting for a return, and then 2020 comes along and everything gets wiped out. But then with this recovery, their returns don't recover at all.
Yes, it's not equal, the recovery at all.
Yeah, exactly. The ratio is not the same. And then the Herman says, well, we're sorry that you got hurt. Here's $1,200 a month.
Exactly. The government says here's $1,200 a month, but that is something that is going to have to be paid back to the government, because they're going to have to pay that back to the central bank, like whether it be through some taxes or whatever it may be, right? So for people who are saying that like the fundamentals are too quick or too fast, or you can't use it to trade, it is something that you use alongside your technical analysis. Okay, for example, If you're trading financial markets, you're trading real world economic markets where institutions are moving money from hand to hand. You have economic data which impacts the performance of a country. You have different political and geopolitical issues, right? If you were, let's just say you were an athlete or you were a player in the NBA. If you were a professional athlete in the NBA, you were a professional basketball player, would you only study one aspect of the game? Would you only dribble with your one hand? Would you only learn to dribble with your one hand?
Two hands.
Right? Would you not learn to utilize as much knowledge and skill set as you can to become the most optimal athlete as you can to perform on that extended level, right? So that is how I see when people create a tug of war between fundamentals and technicals, it doesn't make any sense to me because my technicals are probably better than the 99% in the gulag chat. You know what I mean? Is that right? It's all about using this information hand in hand to put probabilities and confirms in your favor so you can execute a risk on the market with a set reward and then continue to repeat this process with good emotional control and mental discipline, right?
So
Yeah.
hypothetically, is there any way that, let's say, the majority of the U.S. population is able to save or to stop that retransferring of wealth?
That would just be before the stock market. Well, for the majority of people, no, because the majority of people are unaware of what goes on in the financial markets. They just think everything is normal.
Mm-hmm.
So just for everyone's here, general knowledge here, like we have around 3,000 people here watching and listening. How did you start? Like how did you start focusing on fundamentals more alongside technicals?
So with technicals, I like to focus on I always like to focus on the higher time frames, key historical price points, market structure, trends, and price action. But I always was curious to you will never understand what is fully happening behind the scenes of the markets. But I was always curious of what real world economic events or political situations were taking place that were causing these moves. And it doesn't matter. You don't have to know the details of Brexit to know the impact it is having on GBP from a day-to-day perspective. You don't need to know the details. What I mean is, it doesn't matter if there's war, if there's another pandemic, if it's Brexit, if it's a US trade war, it doesn't matter what is going on. There is always going to be fundamental catalysts at play that are impacting the real world economies, which in turn impacts investor behavior of how they are going to move money from hand to hand, right? So I was always curious about what was happening behind the scenes of why these moves were happening, right?
Mm-hmm.
So from that point of curiosity of what was creating the trends, what is creating this different buyers and sellers strength, or why is price reacting to these different points on an intraday perspective or a higher time frame perspective, etc., right? So I was always curious about what was going on behind the scenes. And then after over a couple of years and 3 years, it's been 3 years now that I started trading. I just never stopped from that point on, right?
Yeah, no, that's true.
And it's way too much stuff to talk about, like just on a guest appearance. You could talk for hours about this.
Yeah, no. So like, I feel like the whole fundamental arena is like a never-ending, like a playground. I mean, it's just keeps on going and going. Like once you go into one topic, that kind of like branches off into like multiple other topics at the same time.
Yeah, it does. There's a lot of different topics that are like interconnected, but the way I still like to keep it is I just like to focus on key concepts fundamentally, like looking at macro versus micro economic data, looking at market sentiment, which is just the investor behavior based on fundamentals or economic data, like looking at those safe haven versus risk currency impact and how smart money is moving through the market, depending on like if you have coronavirus going on, Brexit, it doesn't matter. There's always going to be some type of catalyst or economic or fundamental catalyst at play. You just have to understand how to digest the impact alongside technicals and then map out trade ideas based on this information.
Yes. So let me ask you a very layman question here. What's the best way to learn fundamentals, I guess?
The best, there's not really, it's just that's like very open. It's like asking someone the best way to learn technicals. It's very dependent on the person and their learning style and the way they digest information. But you could always start with basics and just go to Google and pull up a university macroeconomic textbook if you really want to start learning the core basics of like interest rates, inflation, different economic indicators like GDP, jobs data, what this means. You can always start from there. Even Baby Pips has like a basic fundamental course as well. Yeah, you could just start with basics like that. After that, after you understand what these different terms mean, how it impacts the markets, then you just start actively watching these things and these different events while you're back testing the technical charts. Then you can see, oh, for example, if you go to GJ or you zoom out on like the 4 hour and you zoom out like quite a bit. Okay, right here. So GJ, if you go back a bit, just go to the side. So GJ for an extended period of time was running this bullish market structure where you had just pullbacks to structural points, right? And then higher highs being created. It wasn't until we had a fundamental catalyst of the Bank of England being more dovish and talking about poor UK economic growth, talking about they need to cut interest rates more, and then also negative Brexit headlines coming to the scene, that you had a reason to break this technical structure. And now you are developing some bearish market structure now, where instead of creating higher lows to higher highs, you are now creating new intraday lows to lower highs, and potentially playing in this structure to revisit these lows and create more of a descending channel technically, right? But it was a fundamental catalyst. It was real economic data. It was the central bank's view on UK economic growth that shifted this structure. If there were no Brexit negative headlines at the time, and there was no negativity induced by the Bank of England, you would have had GJ continuing to play in this higher time frame trend of just creating supports, and then you have continued market optimism. You go revisit the highs and create new highs, etc., etc. But because during this time, when sellers came to revisit this bullish market structure, revisit this previous high and technical support, people technically would start to look for buys at this point, because you have a new high you can revisit, you have bullish structure, you're going to a previous support. You have a lot of technical reasons to buy from that point, do you not? But no, because fundamentally you had all this Brexit negativity come into the scene, because you had the Bank of England with a dovish sentiment, this was the real world fundamental catalyst to break out of this long-term bullish structure and get this shift in structure into some bearish structure now, right? So there's the real world money moving hand to hand, these economic events, these fundamental catalysts. Like there's Brexit headlines coming up as we speak, and people just saw the impact of Brexit headlines live, and we were able to see those news headlines come out to the second in Capital Hungary, because we have like the Icon news terminal where you get the headlines to the second. That's why when we took the Dow Jones sells, for example, when Trump got coronavirus, I was able to get that headline, get that fundamental information within the second, and Ted and I were able to take Dow Jones shorts, and he made like 100K on that. I made 6K, not nearly as much, but it was based on that fundamental catalyst. The fact that Trump got coronavirus, that was going to bring negativity to the US economy, and that you can take this and understand the technical positioning Dow Jones was at to take a sell on Dow Jones based on that information. You have more confidence in taking the sell on Dow Jones because you know the US president just got coronavirus. right? You have more confidence on GJ to play and look for sells on the higher time frame or on an intraday perspective, because you have the confidence of these negative Brexit tensions. You have the Bank of England, who is very dovish, and you have poor economic growth in the UK. So this is what creates the technical trends. This is what creates the buyers versus sellers strength, is this real world economic information and money being moved from hand to hand based on these fundamental catalysts.
Yeah, you know what I think? I think that fundamental news events, breaking news events, they follow technicals.
It paints the technicals.
Yes.
These charts is a blessing for us in the modern day, because we can get information and price action up to the minute. We can go on a minute chart to view price action and get 60 seconds worth of candle data every single minute. But these candles that are being printed, it is based on real world economic data and fundamental catalysts. It is not just bouncing off lines on a chart, right? Because of human behavior, because of historical repetition, you see a lot of trends in different ways you can read the market technically, but it's not the technicals come first. You know what I mean? It's real world money being moved based on economic data and fundamental catalysts that comes first to print out those candles.
So you mentioned earlier, I'm sorry, going back to the redistribution of wealth, but who ultimately is it that benefits? Is it the businesses or the government, or does the government? I know the businesses ultimately benefit to some extent, but how does the government ultimately benefit from it?
The government is the government. It's the institutions and the 1% of investors or the 1% of people that control wealth that benefit from that greatest transfer of wealth, right? It's the people who are aware of what is already going to come, because it's an economic cycle that has repeated multiple times in history. The same shit has happened over and over again. There's just always a different fundamental catalyst behind it. Whether it was war, decades ago, it was war in the Middle East. After that, you had a 2008 financial collapse based on mortgage-backed securities. This year, a decade later, it happened to be a pandemic, right? So, and you can see this transfer of wealth because of the factors I was talking about, and the logic behind it is that you saw the stock market do a full recovery, come back to its record highs, even though there's still millions of US citizens that are jobless, that lost their jobs, that are not working. You still had economies locked down. You still had different businesses shut down, but somehow the stock market's back to record highs.
Made no sense.
It is not correlated to actual US economic growth or the US people. It is just the US stock market is just a tool to move money and keep corporations and keep institutions and keep the 1% rich.
Yeah, I actually saw something the other day. It was a podcast that was talking about where most of the spending, specifically consumer spending, has been coming from, and they said it's like, oh well, basically the top 30% of the population and in terms of income are actually accounting for about 60 to 70% of consumer spending. So it actually is just all that we're seeing in terms of spending is coming from a very, very concentrated amount of people, whereas the rest are just like, hey, and I actually have to believe that even when we get the October 30th like GDP, that we might see some big like change in the markets, because at that point we're going to see how much people have actually been spending, and also what's going to happen with Black Friday. We're not going to have a lot of people spending money on Black Friday at all.
Yeah, that's all true as well. Just for the people asking in the chat how you can use this information to trade daily as well. Rakeel, if you pull up my YouTube, I also have like live streams I do once a week on London session, where like I've only done 2 so far, but if you click one of these, you can see where I pull up the news terminal. See on the, if you just pause it right there, see on the left side of the screen that news terminal. Yeah, so we have those real time streaming headlines that come in every second and every minute, right? So we use this information of these different headlines alongside looking at the dollar, the Japanese yen standalone on the lower time frames, as well as session volume to create scalp and intraday trade ideas on GJ, gold, Euro USD, or USD CAD. So we use this fundamental information of any economic data we have coming out, of any headlines we are actively watching, of also watching our economic indicators such as the volatility index, the US dollar, and the Japanese yen standalone. Because when you see the US dollar is, when you have negative headlines, you see the US dollar is bullish, you see Japanese yen is bullish, then you look at the technical structure on the lower time. So see how you just zoomed and I was looking at sells on gold here, and then you rewind it and look at the sells played out. That's a sell scout. That's a sell call based on looking at the US dollar, the headlines we have coming out, and other different economic data and fundamentals alongside lower time frame price action, technicals, market structure, right? So for anybody that thinks it's impossible to trade or scalp or to intraday using this information, it's just I'm not trying to be rude. You guys are just lacking knowledge, sadly. You know what I mean? It's not a bad thing to say, but it's just that lack of knowledge, to be honest. Because okay, how about this? There's a reason that news terminals, right, or like the Bloomberg terminal, for example, that provides economic data, news headlines, different economic information real time. There's a reason the Bloomberg terminal costs $25K a year, but TradingView is free if you want to go look at charts and just map out some lines. So just keep that in mind whenever you think that fundamentals or economics don't matter. There's a reason that institutional investors or other investors pay $25K a year for economic data. Right?
Yeah, but like those are like large investors, right? For an average
they're retail
trader,
investors.
So for an average trader like me, you think
We're
that
both out. I pay for that. I pay $12K a year, and because I make that money back through the information I can use through that. It's worth it.
Man, you can put that towards your expenses.
It is. I put it to my expenses. I pay $1,000 a month for economic data and information in real time. The key is the real time, right? Just so I can use that information and digest it and translate it into different trade ideas real time as well, alongside that market, alongside that technicals, market structure, etc. If that, you guys can ask Rakeel. I started from penny lots. I did the same thing. Like it's not like this stuff happens overnight, right? So
10-cent lots.
Yeah, started from 10-cent lots when I first started, crashed accounts, and then to had like 30K. When I had my first month where I made 25K in a month, and it was primarily based on my own trading style of mixing the technicals and the fundamentals, all this stuff became worth it to me. So you know what I mean? Obviously for the gulag chat, it can be very intimidating to try to learn more and increase your knowledge. You want to keep things as simple and as easy and convenient as possible, but you just have to do what works for you at the end of the day, right?
Yeah, no, that's true. Low-key, you called us garbage, basically.
Yeah.
Low-key, you're like, man, you guys are garbage if you guys
honestly,
don't have this.
Rakeel, what you do, I 1000% respect, and it's amazing because your discipline is incomparable. In my 3 years of trading, I never seen somebody as disciplined as you, and the trading style you have does require that extreme discipline. Otherwise, people fall into that trap of over trading and over leveraging, because there's always endless opportunities to get 10-20 pips in the market, right? So if you don't have that financial maturity and that experience that someone like you has, for the 99 percentile and the average person, they will fall into this trap of just constantly going up and down and never actually growing their accounts, but just trading every single day, trying to take every single trade they can see. But in reality, they're in this vicious cycle where they never actually see financial account growth. You know what I mean? They just constantly trade. They take one loss here, another win here. They don't really focus on their risk management. They don't really focus on having or trying to increase their risk versus reward ratio. They don't try to keep their losses small. They just are involved in the social side of trading. They're involved in the community. They want to be a trader, but they do not want to put in the work and dedication to fix their bad habits or learn more. So 99% of people fall into this vicious cycle of constantly winning, losing, and just being stagnant and never actually increasing their financial gains. So I respect you for having that extreme discipline to keep your losses small and keep your wins bigger, right? Because it is not an easy task.
No, I also think at the same time, I think if now we're getting a lot of questions here about fundamentals and that, I think it's better to be really good at technical analysis before you jump into really trying to figure out where news or fundamentals is going to move price. Like earlier on, you mentioned how price is dropping, and then the technical level at 136 was like a rejection here.
Yeah. So okay, for example, for that GJ quick sell scalp before we had the mixed headline, right? We had that negative headline come in, and then this impulsive sell play. I instantly told Vince, if I get a retest at 136 and rejections on the lower time frame, I'm gonna take that sell scalp back down to the lows. But then we had mixed headlines, but still that sell scalp, even from 136 down to here, is like what your 20 to 30 pips
40.
that you guys look for.
40 pips.
Right? So that this sell move was induced by a negative headline from Boris Johnson. Then you had investors jump back into the market, retest 136, which is a flat key round hold number and a previous support, and then you had another 40 pip sell move down, or this like 20-30 pip sell scalp down, right? So that's what I'm talking about. But anyways, what you were saying about understanding the technicals first, if you were going to be a car mechanic and you had zero clues about how a car worked, would you not want to understand some of the basics about what goes into a vehicle first?
I'd want to start from how to check oil through the dipstick first.
I'm talking about you don't know nothing about cars.
Oh. Yeah, I'd rather start to say, makes sense.
Yeah.
Okay, the thing is, the way I say it, I know the news are really important for the market, and the terminal that you have it's amazing. I mean, I love the terminal. The thing is, you're gonna need more time in front of your chart when the news come, because you never know when the news are coming. You remember that night when we were expecting for Trump to go to the hospital and that stuff? So the terminal sent the message, but I mean the news were absorbed like 2 hours before. I went to sleep and they released the news, and it was like I need more time in front of the chart to get this news. That's
not true to catch these news trades, because me and Ted caught that trade when you went to sleep, right? It's just about you shouldn't be in front of the charts more attempting to catch a news trade. You as a trader, whether you trade technicals or fundamentals, regardless, should already have preset times that you trade based on your lifestyle, your schedule, and having some discipline and control around your trading. So you should already have those preset times. If you were already looking to observe the markets for only 3-hour window while you're looking for trades, and it's past that, it doesn't matter past that if there's a news headline or not, because you're supposed to be following your trading plan of your set times to trade anyways, right? So, but if during your set time, that 3 hours you're observing the markets, you also have this news terminal, or you're watching the fundamentals, and during that time there's a fundamental catalyst that shifts market structure, you could use this to your advantage, right? So that's a prime example of like when you went to sleep that day, me but Curran, you also just gave a point towards the fundamentals. You said that we were waiting for those Dow Jones sells because we were waiting for Trump to be admitted into the hospital and have COVID.
Yeah.
So we were waiting to take technical sells on US 30 based on that alone. We weren't even looking at what price it was at.
Oh, so you guys were waiting for that announcement to happen.
We were waiting for that announcement to happen. It was when he said he was getting tested, we were already anticipating that if Trump gets coronavirus and this headline comes out, we are instantly going to look at the price action and take a short on Dow Jones based on that information.
Yeah, and then I think we had a conversation about the key level 26 900 or 20.
Where it bounced off, right?
Yeah, and then I had a sell stop there, but man, because waiting for this news to get a release, But as soon as I went to sleep, I removed my sell stop, and if I should have left this sell stop, by the time I woke up, it's gonna be tip and profit, because when I checked the charts, it was like 300 or 400 points below that.
Below it. Yeah. I know. Yeah, when you're talking about if it breaks this area, it's melted, it's gone.
Yes, remember that?
Yeah, I remember that.
Because it was a key level, and it went through all the way down, man.
Yeah.
Also, remember when we were looking at GJ and we were on the stream you were doing, and that
GJ also
right, and we were looking at just at that key level out the the headline that just came in, and it was like a 1 minute 50 pip drop.
Exactly.
Yeah.
So people are very biased where they're saying, now people are saying, but these fundamental events, these headlines, that shift price, they only happen once or twice a month. But now and the same people who are just saying, you can't use this information to scalp or intraday, but you guys are just actively talking about how that negative headline dropped GJ 50 pips, or how it dropped the US stock market 500 points. And if you understand that catalyst and it's going to have negative impact, all you are doing for, if nothing changes that sentiment, is looking for a potential retest point or taking your entry after observing the technicals as well to give you that further confidence, right?
Yeah.
Yep.
Yeah, I usually have Squawk on when I'm trading.
Yeah, it's just good. It's good to understand what is happening technically and fundamentally in the markets, because like the charts are being printed by real world economic, technical, and fundamental data, right? So when you bring these things together, all you're doing is creating more weapons for yourself to use when the time comes. Because we should all, whether you're technical or fundamental trader, the psychology aspect is the same, right? Having the main things that are going to lead to your success is having the mental discipline, the repetition of that good skill set, and rinsing and repeating that. But the more tools you can add to your arsenal, in my opinion, and that you can still use effectively to create trade ideas and put confidence on your side, the better. So,
Ivan, do you think that there's a fundamentally strong argument for investing in silver?
Well, silver's a precious metal, so I could see obviously silver price still continuing up, especially for gold and silver. One of the reasons gold and silver were bullish is also because global low interest rates also keeps gold buys very appealing for those who don't know that. Someone said I'm up 85 pips, no fundamentals. That just doesn't make sense, because that's what's moving the market.
See, here's the thing. I believe that people are wired very, very differently. I've seen amazing success with my trading, only trading technicals. I've kept fundamentals in the back of my mind, but I've never really used it. Then there are people who trade off of fundamentals and technicals, and they do really, really well, like yourself, right?
Yeah.
So
it's all about whatever works for the person.
Yeah, exactly. So I mean, whoever asks me about fundamental knowledge or how they can get better at them, I always point them towards you. I mean, you had an Instagram account which got taken down sadly, or I think you basically killed it yourself.
No, I
But
got I temper when all the IG drama was going on, I just temporarily deactivated it. But then after Instagram checked my posts on that account, they flagged it for political propaganda because I
yeah,
was talking about central banks, I was talking about different political leaders and all this stuff, and like all
Anonymous.
IG lives. I had like 20K followers on that account or something, and then it got destroyed.
yeah, they were like, we gotta silence this guy.
Anonymous.
This guy is giving out way too much information, people.
Yeah, but even the YouTube channel, if anybody wants to go, if anybody wants to go like learn anything, if you just go back to the channel, the videos.
Yeah, there's that channel. Also, Jeevan has his own Telegram. Probably it's not in this description.
Just go to the Capital Hungry
Oh yeah, right
video
there.
section. The video, go to the Capital Hungry channel, and then click the video section. Yeah, so here there's different there's a bunch of webinars if you scroll down. Like from information on crude oil, gold, stock markets, central banks, like a full timeline of GJ. And this is all stuff that you can use for like intraday analysis, scalp analysis, and swing analysis. So different podcasts on psychology, right? So and this is all free resources for anybody who wants to go through it. Who is this? Gulag not ready for Jeeves. These guys, these Gulag members are new, eh? Because they don't. There's not a lot of OG Gulag members. Because we used to be on this every day.
Yeah, yeah. It's like every day there are like new people that come
New
in.
people
It's like a
coming in,
revolving door. Yeah, exactly.
A revolving door. Yeah.
Yeah, that's crazy. I'll just be back in a second. I'm just gonna go to the washroom.
Yeah, we'll wait for the news here.
So what was it again? He said that if we get good numbers on core retail, gold will go up.
Well, I was saying that you're saying about what he said or what I said.
Yeah, no, what he said. So
no, I think he just agreed. I don't think he really.
oh, okay. But anyway, nobody should be trading news, just in case it's a Friday.
Yeah.
I'll be back.
All right. So back to looking at GPJPY here. I know Jeevan's gone here for a little bit, but he's going to be back, and we're going to see how retail sales here for the USD affects gold here in a bit. But I'm just looking at GPJPY here, looking at this 30-minute candle, and to see that if we do reject, like previously we rejected 134, as he stated, and we start to come down. Now, if we create a minor resistance at this point, I think price can continue moving bearish here. So it's going to be really important to see how this candle closes at this point. Will another stimulus news lead to US currency bearish? Well, we'll have to wait and see. We will have to wait and see. All right, let's take a look at this chart here. This was an impulse entry taken below the low over here. Price came down. It took profits to start to range. It's pretty good, pretty good. Hey, when I hear the line, whatever strategy is profitable for you, I start getting a bit moved. I start thinking about the chances of my trading style not being for me. Do you think one can make any strategy work for him as long as he's doing it properly? I've only focused on one strategy ever since I started. Yes, so basically what happens is every strategy, it works. You know, I'm never going to say, okay, you know, one strategy is bad than the other. Like me, myself, I'm a purely technical trader. I only focus on technicals, and that's the only thing I go off of, right? But at the same time, what happens is most time when we start learning about different strategies, like people do strategy jumps, right? Like we're more prone to like jump from one strategy to another. So it's a very good idea to just stick to just one strategy. And my main goal was to say that, okay, if I'm going to win a trade based on one specific strategy, then I'm going to start to look at that and I'm going to see that, okay, how can I repeat that the next day? How can I find the same situation happen the next day? So let's say, for example, right, so we broke below 136, and if this candle is coming up in 20 minutes, if this closes a bearish candle, let's say if this candle closes something like this, a bearish candle right over here, then there's a higher probability for the next candles to continue down to retest, 135,600. So I'm going to see that. I'm going to be like, okay, you know what? This is something I've seen before. This is something I can relate to and I've won in the past on, right? So that's the trade that I'm going to be looking to take for price to continue bearish. Now, fundamentally, that could be another like a bearish move for GJ, but technically that would also make sense. So it's really important to just stick to one thing and just focus on just that thing. Now, Jeevan is now he's a very intelligent guy, right? So that's why he focuses on fundamentals at the same time too, technicals at the same time too. Like he's really focused on those things. What's this? Spent first year of trading just jumping strategies and didn't get anywhere. Now focus on just one and much more success. Yeah, I mean at the same time too, if you're just focusing on like one thing, it's stress-free as well. Because, if you're not getting the opportunities on that one thing, you're just basically saying that, okay, you know what, I'm just going to wait for some more confirmations and whatnot. So we got retail sales coming in 15 minutes. Yeah, 17 minutes. So we're going to see how that moves gold over here. Let's see here, GA long idea. Would love your thoughts. Pretty clean and easy candle and traffic. All right, let's take a look at this chart. This is GA, candle closing above support. I think at the same time, if this candle closes bearish, then basically you have a resistance being established at this point. Maybe to price to continue down. Kind of same like what's happening on GJ right now. So that's something you'll have to basically look into here. So if GJ comes up above 136, I think a better buy is going to be above 136,300 for price to continue up. This may be a stupid question, but hopefully you can answer it. If I entered this impulse trade with stop loss at previous low, does the stop loss always get triggered when we see sharp? All right, let's take a look at this chart here. Entry was here, stop loss was down over here. I don't think this was a good entry because, as we were talking about this earlier on, that we had rejections over here, rejections here, rejections here. So a better entry would have been for price to close above 136,260 or 136,300 for price to continue up. We were actually talking about this while price was breaking up. I was actually talking about this to say that, okay, like, you know what, we might reject it. Where's the chart? Right over here. Yeah, so we're basically talking about this, like we might reject area over here because we have rejections on this time right over here. So it's going to be a better idea to wait for price to close above to get confirmations to go up. And what happened? Brexit happened, you know, like we had rejections here, so there was a probability of a rejection, and boom, news happened. Came down. But you know what would be good? To kind of get confirmations that breaking news is about to happen, so that we can take it. I feel like I'm stuck at phase 2 or 3 for phase 2 for 3 months. Do you have any advice for me to go to the next level? If you're stuck in phase 2, wait, what happened over here? Oh wow, price dipped down even more at this point. So if you're stuck in phase 2, and phase 2 is basically when you're stuck in a break-even zone, right? You're at break-even, you're not making much progress. That basically takes time. You have to give it time. You have to like record your progress as well, and you have to see that, okay, are your losses really small, or are you really choking your winners? Choking winners mean when you put stop loss at break even too quick. You know, sometimes what happens is that if price goes into 5 or 6 pip profits, people put stops at break even thinking that price is going to keep on running into like hundreds of pips. But no, man, when you're putting stops in break even after 5 pip profit, there's a very high probability price will come back and stop you out. You know, so that's one mistake people are making at the same time too. I mean, me, what I do is I just let price run. You know, like if it's going to go to 10 pip, 12 pip profit, I'm going to put stops at break even and secure profits. But if it's like 5, 6 pip profits, I'm not putting stops at break even because, you know, you got to give your trade room to breathe at this point. But honestly, 3 months is not a very long time. You know, like 6 months is an ideal time. You know, by like 4 to 6 month time, you start to understand like where you actually stand. You know, 3 months is a very, very short time to gauge your profitability. You know, so as long as you're in the trade, or as long as you're in the market, which also means that you're at break even, that's a good thing, because now you're moving on from a stage where you're consistently losing and blowing accounts to a stage where you're constantly break even. So that's closer to a winning stage. From that point, people either get frustrated into overtrading, or they keep on in that stage, and you know, it eventually just starts seeing small profits, and small profits lead to, like, you know, some bigger profits slowly, and so on and so forth. Let's take a look over here. Impulse entry after price close above resistance on gold for price to continue up. It's pretty good. I'd say it was this was a cowboy move over here on the 1 hour time frame for price to continue up. And as we're moving into news in like 10 minutes, so it's going to be interesting to see how news moves here.
Oh, okay, what's up?
Hey.
You guys just waiting for the retail sale?
Yeah, retail sales, answering some questions here. I put break even when I'm in profit at 7 to 8 pips. See, that's a problem. Shouldn't really do that. I keep remembering that I already have money in hand, but price going down, that's totally fine. So I just close. So I close position when price comes back to my position. So what you need to do is that if you're closing positions when price is coming back to your entry point because you're getting scared, I think instead of closing the whole position, you should let some portion running, because that's the only way you're going to build confidence. You know, if you let some positions running and it goes to your take profit, you're going to be like, okay, you know what? I closed a partial position because it came to my entry because I got scared, but my rest of the position, it went to my take profit. So then slowly you're going to build confidence in letting the entire position play out. So I think you got to start doing that and getting less scared. We're seeing that rejection now. It's going to be interesting if it breaks above one. If GJ breaks above 136.300, I think it's going all the way to 600, and then eventually we can retest the highs at 137. One more Brexit announcement, some optimism can push this bullish. Alright, what's this? UK has not agreed to negotiations with the EU next week, according to a person familiar with the matter. According to a person familiar with the matter. Who is this person? This rogue person who's familiar with the matter, he made the statement. Why not to enter buys at this time? The reason why not to enter buys at this time is then where's your stop loss going to be? Where would your stop loss be? And even if you enter buys at this time, I don't think there's enough range. Number two, it's going to be risky. Number three, it's a Friday. So I think better buys are going to be above 136,600 for price to continue on. No, 136,300 for it to continue on towards 136,600. That's going to be a much better buy, because look right here, man. Like, we had all these rejections here. We had this rejection here with the news. At the same time, we had rejections here, rejections here, rejections here, and then boom, just like we talked about. And fundamentally, that was the news. Did Raja catch sells? I caught sells at 136 when Jeevan mentioned it. But the man talks too fast, yeah. I had the same problem. I thought it was a magic key update. Can't we really close partials anymore? I think you can still close partials. I have to test the update here today, and we'll see what happens. All right, let's take a look at this chart over here. This is your JPY position. Someone has an open position on your JPY. Please, okay, listen, so it's a Friday. Please don't overtrade. Don't over risk. Just don't do that. Be smart today. Let's take a look at this chart here. This is your JPY. Long once candles form support about 123.450. Took a buy over here. First TP 10 pips from entry. I'll get the runners running. Beautiful, beautiful. I think at the same time too, we're coming up to a little bit of a consolidation area, but if we can cross this area, I think we can continue moving to your take profit. We have news coming in 7 minutes. Is Forex trading easier than stock trading? I think so. I wanted to get into stock trading, but then it was like a lot of researching into companies and a lot of that complicated stuff, so I never really got into it. I've noticed that my trades go below 4 pip drawdown. Most of the time, it hands me a bigger loss, about 6 to 8 pips, so I cut my trades below a 4 pip drawdown as I added. That's making me losses.
The push-up challenge.
Yeah, man, the push-up, the dips, the squats, and there was the fourth one.
The gym's open then.
Yeah, and then the gym's opened at that point.
Oh, someone said, ask Chief about his views on gold against macroeconomic data relating to USD. Both are safe havens, so it'll be really interesting. Ashton, one of the main retail sales in 5 minutes. One of the main reasons that both gold and the US dollar were extremely bullish when coronavirus led to global economic lockdowns and just led to everything being shut down was that physical gold supply and the delivery of gold was being limited and demand was extremely high for actual physical gold, because you had tons of different gold production facilities and gold mines around the world getting shut down. So whenever you have limited supply or capable delivery of this precious metal or commodity, whatever it may be, and you have a high demand for it, the price goes up. So when you had this mass global economic uncertainty, you had the US dollar, Japanese yen, and Swiss franc bullish as safe haven currencies, but you also had physical gold extremely bullish due to those supply and demand impacts, because all those global mines and production areas were shut down, so limited supply, high demand. So both US dollar and gold were extremely bullish. But gold now coming into the 2000s and peaking new all-time highs. If you look at the monthly on gold, once it peaks new all-time highs after having a crash, historically it starts to play in a very higher time frame range. So now, as we've had market optimism, not as we've had markets more optimistic, or a lot of this COVID crash recover, especially in the stock markets, we've seen that the inverse correlation between the US dollar and gold has been more prominent. So what I am saying is, if this retail sales beats the 0.7% forecast, and in my opinion, it would increase the value of US 30. It will cause US 30 to be more bullish. It'll be taken as economic optimism for the US economy, and it will weaken the value of the US dollar, where that inverse correlation of the US dollar and gold can also break out and give us nice buys. But I'm looking if we can break above 1912 though to take that up higher. But yeah, so that has been like the macroeconomic data in relation between gold and USD, and one of the reasons why gold was extremely bullish during when coronavirus first hit the markets. Yeah, I didn't see that question earlier. Sorry about that. Yeah, so 2 minutes until the retail sales report release right now. There's a countdown.
2 minutes.
Yeah, so we can also see how that will impact market sentiment, to see like how that, if it's optimistic data, how it's translated by looking like at the dollar index and gold on the lower time frames. I'm looking for a gold close above 1912, just because I have a higher time frame key level there, or a retest of 1902 and buys there, or above 1912. But it depends on this retail sales data and how it will impact the US dollar sentiment. Oh yeah, and another thing, Ashton, is global interest rates being low. Low interest rates is also a macro bullish bias for gold as well. So you had a triple whammy for gold bulls during that COVID crash. Was you had physical mines being shut down, so supply was limited, you had economic fear increasing globally, so demand was higher, and you had global interest rates extremely low. Most central banks took them down to zero. So
you're looking for buys above 1912.
but it depends on this retail sales data in a minute, because if the sales data is bad, it'll actually increase. It'll make the US dollar more bullish, in my opinion.
I think above 1912 technically makes sense because we got rejected here, over here, rejection here. So if we do break above, we're gonna continue moving.
Nice break and retest above there, then we can correct that downside move to like 1920 areas. 30 seconds till the retail sales report. I'll tell you guys if it's good or bad. I'm just watching the dollar index chart.
All right.
The prior was 0.6%. Rooted the poll is 0.7% forecast. 9 seconds. All right, so the retail sales report is very good, 1.9%. So that is strong data.
Should drop gold.
So like we can see U.S. equities already related to pushing up a bit, but I'm gonna take Dow Jones buys at 28,600 breakout.
See, I still don't understand how the good data should weaken the US dollar. I'm still kind of like torn apart over there.
Well, it's not gonna have like a huge weakness on the U.S. dollar, but it's better for that strong U.S. economic data is better for the U.S. stock market. Not too much impact though.
Oh, very, very, very weak impact over here.
Yeah, so above 1912, that would be super safe.
Yeah, Dow Jones. See how it wasn't a great reaction, but Dow Jones is having more of a positive reaction to that so far than anything else. Dow Jones will probably if I can get a pullback on Dow Jones at New York Stock Exchange open to 28.5 or break and retest 28.6, then I'm probably gonna ride that back up.
28.5.
Yeah, for New York Stock Exchange open though in an hour, because then the new 4-hour candle make its lower wick, plus you get a retest of that same support level for the NYSE pullback, and then with this good retail sales data, and if we have any stimulus, like positive stimulus talks today, we should probably revisit the 28,900 highs.
Wow, nice.
And I'm watching gold either 1902 retest or above 1912.
Yeah, gold didn't move much. Just made like a bottom wick.
New 30-minute candles as well, so it just could be setting up its wick.
Yeah.
1902, like the support area here. Imagine it spikes down, makes a big liquidity wick, and then continues moving past 1912.
Oh my god. That drop on GJ was what, like 100 pips?
But yeah, dollar. I think dollar should continue bearish. Gold should go back up above 1912 for buys, and US 30 should continue up as well after NYSE.
We got free money.
early leaks of key data. Usually, if there's an early leak of key data, it does get released on the terminal as well, like router's icon. But most of the things you have to worry about isn't the early leaks. That's very rare. It's when they revise the data afterwards. For example, the last NFP, the initial report release was actually under forecast, showing it was bad data, and that initial release caused the dip on the US stocks and caused it to first fall. And then 30 minutes later they came out with a revised of the NFP data to 1.6 million jobs. So then the data was revised, there's actually 1 million jobs created. It was optimistic, and then Dow Jones ended up going right back up. That was after Trump got coronavirus. So that was the same 24-hour period. Trump got coronavirus, caused the markets to take that dip, the US 30. Then he said he's feeling 20 years younger.
That would be.
Then he said he's feeling 20 years younger, and NFP got revised to be more positive, and then Dow Jones just went right back to the highs.
That's like a perfect example of market
Can I adopt you? Yeah, no problem. I said on my stream, I don't want no newbies. Yeah, if I had any of you gulag chatters in the Capital Hungry stream, man, oh my god, you guys got
get the gulag
IQ.
mad here.
Yeah, these guys got low IQ.
Oh my god, no. Don't. Plus, they wouldn't last a day.
Are you in for a buy? Just joined.
Just joined 1 second ago. Get at it.
I'm just in US 30 for a scalp, but I'm waiting for the pullback on the new 4-hour.
One thing I've seen about US 30 and GJ and gold, like once they start moving in times of volume, it's rarely there's a retest.
Yeah.
Yep.
Oh, rarely?
Yeah, like rarely.
Yeah. Usually for the new 4-hour candles though, before NYSE.
Oh yeah, for the new one, yeah, but like.
Yeah. If you guys are looking for a trade from now till then, yeah, you guys got like 30, another couple 15-minute candles.
Like, remember yesterday when I was looking for the 0.600 retest on GJ? I never got it. Yeah.
Oh, someone else is on a US 30 buy as well, based on a 4-hour. The only thing I'd be cautious about would be this area here, 28,700.
Yeah, that's what I'm watching as well. No, I was just kidding. Don't worry, Gulag Chat. I'm just joking around. I'm an OG Gulag. Actually, I was never a Gulag member, but I'm an OG stream member with Rakeel.
Streamy boy.
Yeah.
E-boy.
Gee, be careful about Gulags. I was just joking around, man. I love the Gulag Chat.
I just hope no one's trying to overtrade or over risk today and lose profits for the week. That's the only thing I hope no one's trying to do. Hey Raja, do you use both technicals and fundamentals? No, I only use technicals. Jeevan here uses both.
Yeah, if you guys want to see exactly how I scalp or exactly how I intraday trade or swing, well, I mainly do intraday trades, sometimes scalps with my people as well. But there's the free streams on my YouTube.
With my people.
Yeah, not the.
He's got his own. He's got his own tribe over here.
My own dogs.
Yeah, no, his streams are pretty good streams. The Telegram channel Jeevan has, I'm not.
Oh yeah, I don't have that in there. I don't have no information on my.
Yeah, there's no information over, but like his Telegram channel, this guy keeps on going.
Yeah.
There's a Telegram right over here. Monster
Yeah,
Finance
FX.
FX. All right, let's take a look at this.
All right, gold. Come on, it's moving up. Or down.
You can use a couple of different Twitter pages. My wicks, like you could use like Walter Bloomberg Twitter, Live Squawk Twitter. There's a few Twitter pages that are really good as well.
Yeah, Live Squawk is pretty good.
You should type them in on the on the charts. I'm gonna start asking now. How do you spell squawk?
SQAWK. Come on, man. I thought I was an immigrant. Oh yeah, you're an
I'm
immigrant.
also making a bot that posts some of the headlines from the terminal to Twitter as well, like these Walter Bloomberg and these other pages do.
That would be super dope.
You know, I might buy that routers thing and copy you.
Wow.
I might buy it.
No,
Trust me, bro. You need expenses, right? The expenses?
I need
It's an expense.
expenses. Yeah.
It's just an expense, yeah.
Just throw it in the bag. Ooh. Ooh.
12,000 a year. That's not bad.
Yeah, you pay 4,000 a quarter.
Just throw it in the bag. Ooh. Let's get Reuter, let's get Bloomberg, all of them.
All right. What's it called again? This for the Gulag chat here. REUT. Routers.
There's icon EIKON, man. Gulag decrease in my IQ.
Why is it so hard to purchase, man? Where's it?
Oh,
this one?
you can't buy this online. You have to set up up
Yeah.
like a call and a meeting with like a sales representative. They ask you a
No
lot of
way.
questions and shit. Yeah.
Bro, I can just sign in and download it right now.
Yeah, you could download the program, but
The
you don't have a you can just download the platform, but to actually get the license, you have to like set up a meeting with one of their sales reps.
Okay.
Or other companies where you work at, they just give you a free license.
You want me to just share my screen?
Yeah. Just
Oh yeah,
share.
let's
That's
do
what
that.
I'm
Yeah,
saying.
let's do that. That's going to be interesting to see here for everybody.
One
It's-
sec, though. One sec.
All right.
The lab. We're gonna get in the lab.
We're not getting in the lab. We're just peeking through the window of the lab.
Get the codes ready.
One sec, I wasn't signed in here.
I lost about 4,000 to a scammer before I was linked to Mrs. Isabella, and believe me, she helped me
That's a-
recover 4,000.
That's a bot.
That's some, yeah.
They have bots in the stream chats too nowadays. even?
Barely.
Oh yeah.
But they come once in a blue moon.
Yeah, Isabella helped me too, but I'm legally bound not to discuss it.
Yeah, that's a good idea. She can come after you. So.
Yeah.
Hey, Raja, how much do you recommend to open an account? Depends on how much you make a month, depends on how much your savings are, depends on where you live. I mean, there are a lot of variables there. Thanks a lot, Jeevan. Really appreciate that. Love the knowledge, and today definitely would like to learn more going forward. I'll be tuning into your streams page for sure. Oh man, we got you a bunch of
Thank you.
followers over here. Okay, I'm just gonna unshare my screen.
Oh wait, oh yeah, because it wasn't letting me share. I don't know. If you wanted me to
Okay.
share stuff. I said,
All right. There we go.
one sec. Let me sign in here.
The gulag can't see it.
It wasn't letting me. You had it disabled.
Oh yeah. All right.
Yeah, see it?
I'm looking at rakeel right now.
No, we can't. All right.
Oh, here. It says host disabled participant screen sharing.
All right.
You have to like.
Okay, so try now. Should be good now.
Yeah. There you go. So you guys see this?
Oh, hold on. Let's bring this over here. Oh wow. Yeah, we see it.
Yeah, there's a bunch of different apps and stuff within the icon, like as per looking at economic data, the headlines itself. not the oil market crash, but how it went negative. That was because we were looking at these oil storage figures and how it was heavily overstored and supplied. So when we were looking at stuff like that, plus the technicals and how the economies were stagnant when you had the coronavirus lead to a lockdown around the world, it made sense that we started taking oil sells from like $30 a barrel all the way down to 15, and it was the inverse of this oil storage. I know that doesn't make sense to anybody in the Gulag chat, but there's a lot of information you can use. A lot of information you can use through this stuff. But the main thing I focus on and use is just the economic data reports that are going to be released, as well as the headlines that come out like real time. So through that, we have it like we have it get sent automatically to a newsroom, but I'm gonna have some of these get automatically sent to like Twitter as well. You know, that's why when that Brexit headline came out and we were talking, like it was right here, just at 8:40 in the morning, right? But yeah, pretty much you got real-time streaming headlines like nonstop all day, every day.
So
yeah,
this is not a website.
It's
this
hard
is that.
To explain
yeah.
And go into further detail. So just go back to sharing your screen. But yeah, that's basically a quick bare bones view of it. And then I have that on one screen, and then my charts and everything on the other screen.
How can we access this information? You cannot access this information on your own.
Yeah.
Capital hungry.
Has like different economic forecasts, etc., and you use this information alongside the technical analysis, your higher time frame key. Oh man, Dow Jones running nice. I told you Dow Jones would be much more bullish on that good retail sales data than US dollar, right? Like what's US dollar sitting at right now?
US dollar is sitting at, let's take a look at, oh, it's actually moving pretty hard over here.
That's not the US dollar, that's
The
UJ.
DXY.
Yeah. That's UJ the pair. I'm talking about the dollar standalone. Yeah, see, like it's pretty flat still. It's just going up a bit, but look at compared to Dow Jones.
Like the velocity of this moving up is slower than the velocity of US 30 moving up.
Yeah. But there wasn't really good impact from that retail sales report though anyways, so that's pretty quiet.
Yeah, it's been a pretty quiet Friday except for this big move down over here.
Why don't I choose Rand Squawk or Live Squawk? Just Reuters or Bloomberg Terminal are a lot more reliable. Do I get information overload? No, I only use information regarding market sentiment, economic data, and news headlines alongside technicals. Like I don't dive into like crazy things into like actual order flow, or there's tons and tons of economic data you can get yourself into, but I only use the things that work for me. Just like you have certain technical tools that you refine and you back test that work for you, I've done that same thing on the fundamental side. And it's not like I try to say fundamentals are better than technicals or technicals are better than fundamentals. I would prefer to use both, so I have an understanding of what is going on and why, and line that up with having sharp technical skill set, price action reading skills, understanding market structure, just using it all together. Yeah, the oil cells made sense with that oversupply. Jeevan trades the minute charts like me. You were always told it wasn't good for entries. No, it's the best for entries, because a lot of people say the 1 minute chart is very noisy, but everybody then also preaches watching price action and price action's the greatest. But price action is literally in the name. You're observing the constant action and reaction of price. You can do this the fastest and see reactions the fastest at key areas of interest, watching the lowest time frame possible and seeing candles develop or possible signs of rejection or exhaustion or momentum on the 1 minute. Is it easy to use, or you can jump into it right away? No, but like I got webinars and all that stuff.
It depends on like what works for you, right? Like you like you can never say that one thing is it's not going to work because you don't know certain things. I mean,
exactly.
Right? So like if you trade based on if like I don't look at 1 minute at all. I don't look at 5 minute at all either. I trade based on a 15-minute and 30-minute, and I think I'm very successful at that. Right. Yes. So if someone was to tell me that, well, like, like not looking at 1 minute, it's like you're not getting the whole ideas. It depends how you're programmed as a person, how like, it's just based on what you've experienced in the market and what's really working for you. Right. Yeah. I mean, someone can come on and say, okay, like, 1 minute works for them. That's perfect.
Yeah. It's not like, I'm just constantly watching that time frame. As a trader, and even when you are watching the markets through your like 2-3 hour window while you're streaming, you don't just start jumping in trades. Your first 30 minutes while you're observing, you're looking at price action, a bit of the market structure, and you're mapping out potential trades based on areas of interest to you, right? Like how for example, you labeled out bad range, good range, bad range. I would need price above here. I would need to wait for this. You are pre-planning your trades based on confirms around your trading system. I do the same thing with my intraday analysis, where I say if GBP JPY is still bearish intraday and higher time frame, if we still have Brexit negativity, if we get a retest to this price point, I would be extremely interested in looking for potential buys or sells for XYZ reason. And then when price does get to that price point of interest, or I like to call it an area of interest, that is when I start observing price action on the 1 minute to monitor the reactions at this area of interest, whether it's a higher time frame zone, whether it's a previous support or resistance, a retest of structure, it doesn't matter. So I just start observing price action at those points when it's interesting.
Yeah, we used to have a guy here called his name was Javier. He was the 1 minute man for a very, very long time. This guy
for different reasons.
Right.
Javier days, man. The gulag doesn't even know. That's a myth to the gulag chat. Javier.
1 minute.
So, but not for price action. If you know where you want to place your entry, why would you look at price action? Because just because you have an area of interest where a potential trade idea can take place doesn't mean it's always going to happen exactly as you envisioned. You still want to observe price action to see if you're getting the technical confirms you need to execute based on buyers and sellers strength, momentum or exhaustion, and other things you look at while you're observing price action.
We're coming down to that support area on gold, a potential move up from here, if there will be.
I was looking at 1902. It's a little bit deeper, but I was going to see what happens at 1902.
Where can I check out the history of this group? The history has been erased.
They want to see the history of the OG.
Oh, it
Forex
was like
family?
Yeah. That was the real life gulag, man.
that was yeah, man. We were ruthless.
There was Javier, there was Rag, and like a lot of different characters. Came through.
People would think we would be mentally messed up if they saw the events that took place.
I got the original chat still, man.
Damn, Kev, you got the original chat still?
Yeah, I got the original chat on Facebook. I got Rakeel group, Car group, Ted's group, Rags group.
Yeah, Rags group was a shit show for sure. Diego, if you want to know how I personally use the 1 minute time frame, you could just go to my YouTube channel, like Rakeel has shown you guys a bunch of times, and there's tons of webinars on there.
Yeah, right here.
There's a whole scalping series I got from part 1 to 4 too. So,
Man, I think if you didn't do the things you did on your Instagram page, all this value wouldn't have been,
right?
underrated.
Trust me, it's underrated value right here.
Nice artwork too.
Yeah, you like those?
Yeah, you do them yourself?
Yeah, the thumbnails. Yeah.
Oh,
That thing looks like a quilt.
yeah. This artwork is pretty good.
Different currency pairs, different fundamental topics, psychology, scalping, intraday.
Yeah, this artwork is different than the regular garbage we see now on YouTube. Like, where people crop their faces on and like big things they write.
Clickbait, like the clickbait stuff.
Yeah. Clickbait stuff. All right, let's see here. Forex.
I think who just did one recently?
Strategy.
Some guy, some Asian streamer. Some Asian streamer just did one.
If I type Forex strategy here.
How to make money in Forex easily.
Yeah, like this here. Insane scalping strategy for small Forex accounts.
Oh my god.
I mean,
14 to 39.
Why wouldn't this strategy work on bigger accounts? Why only on smaller accounts?
Because they're trying to attract the 99%. They're trying to attract the gulag, and like, you know what I mean?
Yeah. How to trade US30 like a pro. Yeah, this is all clickbait.
Yeah.
Simple 500 a day scalping.
And they all show their faces.
Is this indicator even legal?
They all crop their faces.
Forex NBA strategy.
NBA young boy.
Never broke again.
Never broke again.
Wow, man. This is
surprised we didn't see Danny Savage yet or anybody. Yeah.
All right, so let's go to Jeevan's channel here. Yeah, man. I think the industry, there's a lot of these, because of these clickbaits, a lot of legit people get I don't know, they get bad rep just because of.
Yeah, it's not like I post that stuff. It's good if I get exposure, but it's just there if anybody wants to learn from it. Because like you said, 99% of the stuff is just clickbait to attract people and give them the least path of the easiest path to success, and give them this convenience and all this stuff and make it seem so easy. You know what I mean? It's just targeting human weaknesses for marketing purposes. That's it.
Oh wow, who's that girl?
Yeah, like right over here, 200 to 3,000 in 3 days trading Forex in 2020.
Like what the pictures they have of themselves is always like a weird pose. The finger, what's it even mean?
Yeah. Look at the girl.
Yeah, Mac. That thumbnail is meant for people like you.
Yeah. See, Mac just proved it.
Mac proved it.
And for 2021,
$5,000 a day on OnlyFans.
we can't say that.
All those guys, like remember on IG, Daniel Savage, all those guys got so pissed off at me because all I did was I took the top 10 marketers IG page. I don't care, Q Banks, Daniel Savage, all these guys. I took their IG page and I covered all their faces with a smiley face, and I said, "Can anybody tell these pages apart?" And all it was, when you cover their face with a smiley, is all you got left over is the blue or yellow Lambo.
I saw that.
That's it. Yeah, that's it. And everybody got so pissed at me for doing that. I was like, everybody's page looks exactly it wasn't even making fun of what they do. It was just, you can look at any of these IG page, and if you cover their face, all you got left over is cars and some Louis bags and shit like that.
That guy's funny. He's a
trip.
He should make
indicators,
a docu-series.
Click on parabolic SAR and copy these 0.01 and.
This is the most legit.
Yeah, this is the funniest one. It played that one.
I can't believe it, man. And
Put the volume up.
People in 2020 believe this. About
Yeah.
75% of your Gulag chat was signed up to this man.
okay,
The chart
So you look at this chart, in mostly all of his pictures, he has the same exact chart.
hasn't been touched. Like it's the same default colors, black and green. But it's still the things he says, they're just too.
I think GJ's gonna go up, man. We just got some positive headlines. I think we're coming above 136. Is it breaking? Oh, never mind. We're at 136. I thought we closed above it.
Yeah.
For this 4 hour, but we have a new 4 hour candle still. Right now, I'm just gonna wait. Friday. It's Friday today. Actually, it's not even my trading day.
Yeah, it's Friday. Man, this guy has been 23 for the last 3 years. A 23-year-old millionaire Forex trader.
I love that guy, man.
He's
55. I got 3K subs. This guy got 55K subs with these clickbait ads.
Yeah.
Oh, but his videos get taken down. That's like his 5th account, probably.
No, look at this. Almost like 500,000 views.
Oh, for real? He's kept it.
Homeless to millionaire Forex documentary.
What do you reckon about my gold? About gold. Oh, let's see how this new 4 hour. How these new 4 hours just open up. How the last 4 hour close? Gold's still looking. I don't know. Gold's still looking bullish to me above 1902. If I get a 1902 retest and it fails to break below that, still looking bullish to me, and safer buys above 1912. Like this 4 hour candle didn't break the low of the previous, as like what Roger would say as well. You know what I'm saying? It wasn't like a bearish engulfing close. We did reject 1912, which isn't a good sign. That's why safer buys for me would be above there, or if we retest 1902 and fail to break. Dollar's looking a bit mixed right now, which isn't too good, but it's just Friday, right? Nothing too crazy is going on so far.
Yeah, I'm gonna head off over here.
Bye bye.
Yeah, I'm gonna head off over here soon.
Yeah, should I continue it on? Like, hi.
Oh, you want to continue this on?
New York Stock Exchange open. New York Stock Exchange to London close stream.
Keep it going.
Okay, yeah, we can get the
Gulag. You want to keep it going?
I guess one person. Gulag.
Yeah, we can get it going. Yeah, I'll leave the stream open then.
Oh no, I was joking. I'm going to Friday. Breakfast time.
Make my stream some money.
He wants those minutes in.
Oh, that's why. Yeah, then yeah, we can if you want.
Oh, the Gulag is going. Yes, let's go. What do you think about EDZ? I don't know what EDZ is.
Yeah, you guys do need help. I've seen about 30 times asked about what my YouTube channel is. We've no
I've posted it.
See, this is what's wrong with majority of the population. Like, people don't read or investigate a little bit.
Yeah, they're so rushed. They're so on a rush. They're so like, on
rushed.
edge. Yeah, they're so on edge and stressed out and rushing everything. Like, take a breath.
Yeah, it's like we got 2,000 max in the good. No, sorry, like 2,000
Yeah.
like people.
Hey, F you.
But all right, yo, thanks for having me on. I know it's very confusing for a lot of people, but if you want more clarity on it, watch the videos on my YouTube.
Yeah, man. Thank you for taking the
That
time.
was good.
See
Yeah, all you have to do to get to the YouTube is go to YouTube and type Capital Hungry. That's CAPITAL and then Hungry. HUNGRY.
Capital Hungry.
Have a great weekend.
Yeah.
There you go.
Thank you, Juven. Thank you, Rakeel. Thank you, everyone.
Take care.
Thank you, Mac.
Thank you, everyone.
Bye.
Oh, Forex 531 in 1 hour, easy money, Jeremy Cash, Forex trading, one candlestick strategy. All right.
Later.
This is all you need to know to become a 6 and 7 figure trader. How come he only made 3 figures then? How come he didn't make 6 figures? I don't know. All right, everyone, take care. Please don't overtrade. It's a Friday. Call it a day, and awesome. We'll see you tomorrow morning. No, Monday morning.